Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. There are certainly lots of different ways to invest in real estate, but most of it is predicated on someone paying you for the use of your property. Today, we're going to talk about a very unique niche where your tenants aren't people, but boxes. We'll discuss self-storage and how you can make boxes of profits today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms, and joining me in the co-host seat, it's our financial strategist, Russell Gray.
Hey, Robert.
As a new year gets cranking along, we're looking at the ways we're going to change our real estate investment in the future. And of course, two big ways to invest. You can invest actively, like most of our listeners do. You're out there shagging deals and doing all kinds of stuff to find great team members. And maybe you're actually getting your hands dirty in the property. Some of you are construction and development, very active in the business, whether it's part-time or full-time. The other way to invest is to invest passively. Rather than you get up every day and go do the work, you entrust somebody else. Could be a partner, joint venture, maybe you just buy home building stock or a real estate investment trust, or get involved passively with a syndication. But there's lots of ways to invest that depend on you and your investment philosophy. And then there are the categories of investment, the things we can invest in, all the different asset classes within real estate. Today we're going to talk about a really interesting asset class that I first got a real exposure to, not thinking of it as an investment, but at our investor summit. One of the early summits, single-digit investor summit, we had a couple who was there to renew their real estate licenses. Our first two summits, we had a combination of what we used to call DRE at C, that is renewing your Department of Real Estate hours for your license, and our investor summit. And this couple, they didn't really seem to work much. And we got in a conversation with them, and they're like, yeah, we're mostly retired. And they were in their late 40s. I'm like, well, how are you retired? Like, well, through real estate. And we got talking to them. Their investment class was self-storage. They owned buildings that held boxes. And so this is a really, really fascinating and growing real estate asset class.
Yeah, there's a lot of reasons to like it. Obviously, all the basics of real estate, cash flow, leverage, tax benefits. And like anything, it's about demographics. It's about the market. And when I say market, I mean not just the geographic market, but the demographic market, the clientele you're serving, and also the product niche. In other words, how are they using the property that you're offering them? Even in the area of self-storage, there's different kinds or types. Some people store vehicles. Some people really, it's outdoor, it's self-storage, but you're storing boats and RVs. For other people, it's what we typically think of with the roll-up door and the containers and all of that. But at the end of the day, when you look at what's going on in the world and you want to put yourself in a place where there's going to be persistent, consistent demand for a product that probably isn't going to change much as a result of technology. We like housing, because people are always going to need roofs over their head. And so an adjunct to that is housing for the stuff that people have. And that's where self-storage really fits the bill.
Well, it sure does. And to your point, lots of different reasons people use self-storage. Our guest will help us delve into some of that today. And then before we're done, we'll figure out where and how there might be opportunity for individual investors, either on an active or passive basis. We first met today's guest almost a decade ago. He came out to one of our events, and it's been amazing to watch his trajectory. Today, His company is one of the Inc. 5000 fastest growing companies and has been for the last 4 years. When we come back, you'll meet our self-storage friend, Ryan Gibson, today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
All aboard! Registration is open for the Real Estate Guys 22nd Annual Investor Summit. Imagine spending more than a week with like-minded investors, world-class educators, and real-world professionals. Returning in 2024 is the editor of the Gold newsletter, Brian London, real estate developer Beth Clifford, and the rebel capitalist George Gammon. Back with us in 2024, sales legend and best-selling author Tom Hopkins. And joining us live and in person for his 12th Investor Summit, Ken McElroy. Plus 2 brand new faculty members we can't even mention yet, and a lot more. It all begins June 13th in Fort Lauderdale, Florida. Visit investorsummitatc.com to get all the details and reserve your spot. This transformational week is like no conference you've ever attended. Go to investorsummitatc.com and make plans to spend a week with the Real Estate Guys, Ken McElroy, Tom Hopkins, and an all-star faculty on the 22nd Annual Investor Summit at Sea.
Hi, this is Kendra Todd, winner of The Apprentice, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, now in our 28th year of broadcast. We're kicking off the new year talking about a really interesting niche for real estate investors to consider, and that is having your tenants not be people, but boxes. Self-storage has been certainly the talk in real estate circles for a few years, and the gentleman you're about to meet knows a ton about that. Please welcome to the Real Estate Guys radio program our friend Ryan Gibson. Hey, Ryan.
Hey, Robert. Thanks for having me.
Well, it's great to have you. We've certainly had you at our events and run into you all over the places. You've been preaching the gospel of self-storage, if you will. Tell us, Ryan, before you're even in self-storage, tell us about your path into getting into investment real estate.
Yeah, so I actually had a career for about 17 years as an airline pilot, and got my ratings in high school, and built my way up there through selling Cutco knives, and kind of exchanged my time at that point in my life to sell, and learned how to sell, and made money, and actually paid for a lot of my flight training, got out of my flight training, and really just had that entrepreneurial itch that I had to scratch. So got into some real estate investing through pilot housing, pilot crash pads, as they're normally
nice.
alluded to. Yeah. As I sort of got into my airline career, really wanted more and wanted to build a business. And I met my business partner, Scott, as neighbors in Washington, D.C., and we built a portfolio now we're the 36th largest operator and owner of self-storage in the country. And, we started off in your typical real estate investing, flipping houses, building condos, things like that. But really wanted something more, something that we could scale. And we wanted to build a big company and a team where we could serve our investors and serve our people and really have a great place to work. So that's Spartan today.
That's awesome, man. You guys have been on the Inc. Top 5,000 list for many years.
Yeah, 4 years in a row this year. So in the Vet 100.
That's awesome stuff.
Yeah.
Well, let's talk about self-storage, because this is such an interesting part of real estate. I think most people can relate to the fact that at some point in their lives, they got some stuff they got to store, whether it's because they're between moves or they're combining households or whatever the case may be. But self-storage is a really fascinating business.
Yeah, I think you nailed it right there. You talked about moves. So that's displacement. So self-storage is a beneficiary of the 4 Ds was what we call them: displacement, downsizing, death, and divorce. And so those things never stop happening. So a lot of people think, Americans use self-storage because they've got too much stuff. But really, it's the life events that keep self-storage a recession-resistant asset class. And so when you think about those things in life that are going to happen regardless of the economy doing well or the economy doing poorly, people are going to have those 4 Ds, downsizing, displacement, divorce, and death in the family. So that's why we love it. That's what's kept it recession-resistant for the last 40 years. But the reason why we really got into it is because when we wanted to grow and scale a company, we looked for 3 key decision-making criteria, which was easy to own, easy to evict, and easy to maintain.
Well, those are really 3 great points. If you think about the most expensive part of buy and hold real estate, it's turnover, when you have to make ready a unit after a tenant has moved out, and vacancy, the time that no one's living in the unit and you're still paying all the bills. And with self-storage, you have some real advantages. First of all, tenant-landlord law, right? One of the big things you need to think about as a buy and hold investor is that every state in the union and every country is different when it comes to its tenant-landlord law. Some places are a lot more friendly to tenants, others more friendly to landlords. But this is a whole nother world because tenant-landlord law doesn't really apply to boxes, does it?
It doesn't. And if you think about the tenants are actually customers essentially, and the second line in a self-storage lease says something to the effect of the owner has the right to vacate the tenant or the customer if their rent is not paid within 30 days. And so really when a tenant or a customer signs up for self-storage, they're signing a lease that gives us lien rights so that if they don't pay, we can put a lien against their belongings and then auction off their belongings, usually within 30 to 60 days, depending on the state. But generally, after 3 days of non-payment, we can remove their access to the property entirely. And then after about 30 days or so, we put them into the auction process, which allows us to get our unit back and recover the costs that we went through to evict that tenant or get them out of the unit. Any legal fees, any lost rent, we can auction off their belongings and recover that rent from the tenant. But most importantly, we get our unit back and we can rent it back out again.
Yeah, so the durability of income part is certainly big there. I think people have seen storage wars in these shows that find, that all these hidden treasures or drama or whatever the case is. You've been in the business a while. What is the major kind of stuff that people store in these units?
It's everything from staging for furniture companies, businesses, food distributions. And I like to say that, 70% of our customers are the 4Ds, death, displacement, divorce, downsizing. That's 70% of it, but 30% of it's businesses. So, there might be food distributors, there might be sheet metal contractors, Little League baseball teams, or other personal recreational use. Anything that really people need in their lives to operate personally or for professional business. And so we see quite the gamut, auto vehicle storage, RV and boat storage, businesses that come into the units, people that are storing their furniture in a move or their, heirlooms to junk. Sometimes we see, a door open and there's really a whole bunch of stuff in there that really has no value, but value is in the eye of the beholder. And, some people want to hold on to their belongings as they make moves and, or have access, need for storage in an external place like self-storage.
So when we bought our house, we rented it for a year first because we weren't sure of the new area and the like. And the guy had the house before, had a huge bunch of stuff in a storage locker because he thought that there would be a point that he would be moving back and move into the house. Well, obviously, since we bought the house, that didn't happen. And I remember when he had to come back and just spend a week sorting through all of his household effects, some of which he was able to sell, some of which he kept and sent to, we actually moved to Australia. And then the rest is just like, well, we got to get rid of this stuff. And he'd only been gone a year, but he was like, man, I can't believe I even kept some of this stuff. I know I personally have storage units in 3 different states. So I am a customer of this product. And with the exception of one of those, happy to have it. The other one is one I probably should go spend a weekend, clean out and get rid of. But we use it for a variety of things. And it gives that flexibility. Most storage is not climate controlled in any way, but some is. Do you guys work with climate controlled storage at all?
Yeah, we do. Probably just shy of 50% of our portfolio is going to be the climatized units. Everything ranging from heated only, like in the Pacific Northwest, where we don't really need an air conditioner, to the Texas portfolio, where we have a lot of climatized units where customers demand that heated and cooled, but really kind of mold control is really what you're after, right? Where you're trying to keep the belongings in a safe, cool, and dry environment so that there isn't mold that spreads. And, Texas is a great place for that. As you know, Robert, no basements and your attics are super hot. So there's really not a whole lot of storage in between. What I think was also interesting is, 66% of our customer base is they also have garages. So people are using self-storage even when they have garages. I like to tell the story when I actually use self-storage, because I thought this self-storage asset class was pretty silly.
Yeah.
And what I realized is, when I had kids, I had to move my house. I upgraded the size of my house. And in order to get my house ready to sell, I put it in self-storage. So when I moved, when I got displaced, I actually put my belongings in self-storage so that I could stage my house and get it ready for sale. And then I moved into my new house, and eventually I got my belongings back. And it took a little longer to sell the house and et cetera, and things like that. And so you kind of stay in it longer than you think you do all the time. And then the other story I like is when we were actually having more children, we expanded our house. We renovated it. So we cleared everything out of our house thinking the renovation was going to take 2 or 3 months. And you know where this story goes. It took about a year and a half, maybe. Who's counting? And so my stuff stayed in self-storage during that renovation time for much longer. And so I finally it's sort of clicking for me personally. And the last thing is, I was an airline pilot and flying down to Florida. And I remember right when the pandemic started, I was flying, and there was one person on the flight. And I'll never forget, I went up to that one person and said, "Welcome aboard your own private jet. Where are you going?" And she said, "Well, I'm going to Florida. My mother just passed away, and I'm putting her stuff into self-storage." So what I realized is no matter what's going on in your life, whether you're upgrading your life or maybe even someone dies in your family, you're going to be surrounded by self-storage. And Robert, I hear that story that you told me time and time again where, I get in front of a lot of investors or people talking and say, "Hey, who's ever used a self-storage?" And all the hands go up. And what I always say too is to follow that question is, well, how many of you think that was because you had too much stuff?
Right.
And all the hands kind of go down. And when I ask the questions, the 4 Ds come out, or business use, every single time.
So I guess that brings up one of my primary questions. We think about rental property in terms of how often it turns over. What's your experience there? I mean, I know there are people that must use self-storage for a couple of months, and there's people that have a unit indefinitely. What is the average length of tenancy?
So in our portfolio, it's 38 months from the time somebody moves in to the time they move out. Now, obviously, you have to look at kind of same store average occupancy or length of stay, because we have facilities that we build from the ground up, and we have facilities that we buy that are existing.
Yeah.
And we've seen everything. We've seen when we bought a property. For one of our very first facilities, we looked at the rent roll, and we could see that a tenant had actually been in there since the 90s, since 1991. So we see tenants that have been there for 20, 30 years to new facilities where obviously the length of tenant stay is going to be a little bit shorter. But people tend to it's a sticky business where people move in and they tend to not to move out. And what's great is, the lease is actually a 30-day lease. That doesn't mean they have to come in and sign a new lease every 30 days. It just means that we can adjust our rates to the market every 30 days. So when you think about an inflationary hedge or keeping up with where the market's at, we can adjust that 30 days, which makes it a really attractive asset class to be in.
Now let's talk about competition. There's some big brand names of self-storage, and then you see the little self-storage place that has a, couple dozen units. What does that landscape look like? And are there places where you see self-storage being overbuilt or drastically underbuilt?
Yeah, that's a lot to unpack there. So first of all, the publicly traded REITs, there's kind of 4 main publicly traded REITs: CubeSmart, Extra Space, and then there's NSA, and also Public Storage. Those are kind of the 4 main big publicly traded REITs in the space.
Yep.
And then there's quite a bit of large privately operated groups, Spartan being in the top 40 of those. But, the Prime Group and a few others that really have institutionalized the space, Merritt Hill Capital, for example, et cetera. So when we got into the space, we saw that. We saw a lot of these very sophisticated operators who have really got their control on the market. They have better spending, economies of scale, things like that. So we actually stayed away from those markets, those core markets where they primarily invest in. And so we started in secondary and tertiary markets where there was better yield and where we were steering clear of the REIT competition. So they have heavily been in the space, and there's been some very interesting things in the news lately that you've probably heard, where Public Storage actually bought the Simply Self-Storage brand, and Extra Space bought Life Storage because they cannot consume enough. They need to be buying and building their portfolio and growing it for their shareholders. So there's been a rapid consolidation in the space. But there's still so many opportunities where 60 to 70% of these facilities are still, like you said, the mom and pop owned, maybe in the outskirts town, things like that. Now, demand is a really important thing to understand in self-storage. This is a 3-mile market. This is not a how is self-storage in Houston, and then generalize, right? You can maybe get some rents and things like that and population trends. And those are important macroeconomics to understand, or demographics. But the business is a 3-mile business. You have to know what the population is around your property, what the drive-by traffic is, what the demand is for that facility, specifically the competitor facilities, how full they are, what the pricing strategy is, et cetera, so that you can understand if that one property has good demand. And that's why I think boots on the ground in your local market, you can certainly pull a desktop feasibility study, but you have to know what's going on in that hyper local market to really assess if that facility has demand for the business plan you're trying to execute.
And then, of course, in any industry, you want to think about what does growth look like? And I'm sure you've taken a look at that. What are some of the metrics that are going to affect the future demand for self-storage that you guys see?
Well, I think it's important to note that self-storage penetration by household has been increasing. So when you think about the demand in 2009, it was about 9% of households that use self-storage. That's increased up to about 11.2%. So when we see macro industry trends, the trend is that more and more households are using self-storage. It's becoming more accessible. It's being built on every corner, and it's becoming part of people's everyday lives in America. And it's also starting to spread globally to international cities and international, in other countries, right? So when you think about its growth and its acceptance in society, it's becoming part of the mainstay of how people, interact and use it for moving, downsizing, relocating, et cetera. So when you think about the trends, the trend is going up. And when you think about maybe the operational trends, you see more offerings at the property, like the climatized units, like you said, making it more accessible to pay online, to book online, to automate the facilities so that people can come in and they can book their own unit without having to speak with anybody, the kind of contactless approach that sort of was accelerated in COVID. So the industry, the trending in the industry is it's quite exciting at this point.
It also seems to be kind of a counter-cyclical investment in that when, like right now, we've got a situation where a lot of folks aren't moving who might otherwise be because they don't want to get rid of their 3% loan and get a new house with a 7% loan, but they maybe outgrown their house a little bit. So they might say, well, we could get a storage unit and it would be cheaper to store some of our stuff than it would be to take on this new, mortgage. And when times are tough, I remember back in 2008, we saw people downsize, but they didn't want to get rid of all their stuff. So self-storage had a pretty good year the next year. Can you speak to that part of it being kind of counter-cyclical?
Yeah, totally. And I think every recession or every economy distress is different, right? And so when in the great financial recession, we saw just exactly what you said. We saw tons of distress. People lost their houses, foreclosures, things like that. In this economy today, and when we're recording this in 2024, we're actually seeing something interesting happen where not a lot of people are moving right now. People are not selling their house because they've got that attractive 3% rate, fixed rate. They're not moving they're not upgrading because now it's coming at a 7 or 6% rate and a much bigger mortgage, right? And so they're kind of doing the math and realizing that it's going to take quite a lot to make an upgrade. So that's actually put pressure on some of the move-ins that we have in self-storage. And so street rates are actually declining. Okay, so that's the asking rent for a property. And you might be thinking, oh, well, self-storage is dead then. There's no opportunity. Well, in fact, it's interesting that if you look at the REIT data and you look at our portfolio specifically, our NOI is improving. And the reason why, even though street rates are in decline, the existing customer base that you have in your self-storage facility, you can increase your rents on. So while maybe you might have headwinds or pressure in the industry, again, economic pressures in the form of people not moving or buying or trading or transactional activity being down, you still have the opportunity in this sticky business to raise rents on existing customers. And to your point, maybe people have a self-storage because they're in a house and they can't move and they've got too much stuff, right? Or they have a positioning where they need a self-storage facility because they can't do the move that they're doing. And that's sort of loading the spring right now to when the rates do come down and people ultimately end up moving or downsizing or having distress, which I think largely we're not having a lot of distress. People aren't losing their homes in mass right now, right? We haven't seen a lot of downsizing. We haven't seen a lot of moving. I think that's kind of the loading the spring to kind of go when the world starts moving again. and Americans will be on the move. And that's why I think it's a great time to be in self-storage, because we're still seeing NOI growth and we have the opportunity for a lot of moves in the future.
We're talking about a very interesting real estate investment niche. That is self-storage. Ryan Gibson is our guest from Spartan Investment Group. We'll find out more about how you can actually get involved with investing in self-storage, and we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 19 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful. And wait till you taste the food. But the real opportunity is the real estate investment potential. How so? Well, that's what you have to come see. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and lots more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, the top tourist market, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me in Ambergris Caye, Belize as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize. It's a beautiful country with lots of amazing possibilities. And the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
Hey everybody, it's Ken McElroy, and I'm on with the Real Estate Guys, and I'm very excited to be a guest and a speaker at the Investor Summit coming up. If you haven't signed up, be sure to do so.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Make plans now to join us for the 22nd Annual Investor Summit at Sea. It's going to be absolutely spectacular. We spend a couple of days on a hotel, then get on a luxury cruise ship and hang out with people like Ken McElroy, George Gammon, sales legend Tommy Hopkins, Peter Schiff, and more than a dozen more faculty. Get all the details at investorsummitatSea.com. That's investorsummitatSea.com. We're talking about boxes of profits today, the self-storage industry, and how you can be part of it with our guest, Ryan Gibson. Before we get back to that interview, it's time to play Real Estate Trivia, your chance to win a prize by knowing today's Real Estate Trivia question. As soon as you hear the question, think you might know the answer, send your best guess to trivia at realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address. The first person that gets it right gets a book you're going to love. You may actually already have a copy, but why not get an extra for a friend? It's the 20th anniversary edition of Rich Dad Poor Dad by Robert Kiyosaki. That could be yours if you know today's real estate trivia question. Last week it was our Ask the Guys program, and we asked you this: which U.S. state are the most Americans leaving? Well, perhaps no surprise, it's California. According to the U.S. Postal Service change of address data, more than 100,000 Californians left the state in 2021, and the net out-migration continued in 2022 and 2023. People continue to leave California. By the way, the top state gaining Americans was the state of Texas, followed by Florida. Here's our real estate trivia question for this week, and it seems appropriate for today's topic. Which U.S. city has the most demand for self-storage? Yep, of all the cities out there, there's one in the U.S. that has the highest level of demand for self-storage units. Growth of demand is not equal. If you think you know where that is, all you have to do is send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, your guess, and your physical mailing address so that if you're the winner, we can send you the 20th anniversary revised edition of Rich Dad Poor Dad by Robert Kiyosaki. That's today's real estate trivia question. We've got Ryan Gibson with us from Spartan Investment Group. And Ryan, you and your partner have been building up quite an awesome portfolio of these self-storage properties we've been talking about. But it hasn't always been that way. You had to first identify the niche and get started. Talk about your first acquisition in self-storage and then how you've got from that to be one of the top Inc. 5,000 businesses for the last 4 years.
Yeah, so it all started in Washington, D.C., where we were building and buying and developing residential real estate condos and single-family homes specifically. And I listened to this podcast and actually learned about your secrets of successful syndication. And what really attracted me to that was, how to raise money correctly. And, so I went to the conference with myself and Scott Lewis, and actually we learned all about syndication. And we knew that you could raise money from investors, but we just didn't have the format and some of the overarching strategies to do that. So that conference really put us on the rails. That was back in, I think, 2015.
Yeah.
And just learned a ton from that. And, got back, Scott had a really good strategy, business plan, focus on building an awesome culture. I was mostly on the capital raising side. Together, we put together about $300 million in private equity or syndication. And we built up a really nice, about $600 million portfolio of self-storage, and we've sold and bought and all that stuff since then. But that's really kind of how we got our start in the space. Self-storage specifically, I mentioned our three decision-making criteria that led us to pick this asset class and just how resilient it's been for the last 40 years. And then we just dove in to learn everything we could find out about it, going to conferences, industry trade shows, getting in front of folks. But that first deal was interesting. It actually, when we declared self-storage that we were going to do that in 2016, it really took us 2 years to find our first property and close.
Wow.
So it was a slow, really methodical process of making sure the first few that we did were good, because we didn't have experience in the space at the time. So we wanted to have enough wiggle room, headroom to actually make sure our first couple deals were really solid for our investors. So 14,000 square foot property, which in self-storage is like very small, postage stamp.
Yeah.
In self-storage, our typical size property that we buy is about 70 to 80,000 square feet now. So very small property. We ended up expanding it. We bought it off market and we got seller financing. And so really good property. We've actually sold it and turned our investors a nice profit on that opportunity. But really that's kind of how we cut our teeth in the space, buying our first institutional quality asset in 2019. And then it's just been, really hyper growth since then.
Well, and success breeds success, right? Every property that you guys add to your portfolio, I'm sure there are lessons and there are great opportunities to take some of that knowledge and apply it to other properties and so forth. You mentioned earlier that sometimes you buy an existing facility, but also sometimes you build ground up, which are really two different things when it comes to the business model. But being able to build ground up, this is a relatively inexpensive asset to construct.
That's right. Yeah. And what's interesting is self-storage isn't hard to build. It's just different. And I think a lot of people can overthink building them and underthink building them or more over-engineer them. We've bought a ton of property from general contractors who build residential housing, and they hear about self-storage, or they have a random piece of property and they build self-storage, and we buy these from the contractor. And it's always interesting how overbuilt they are.
Yeah.
From the standpoint of all the bells and whistles that really aren't needed in a lot of these facilities. There's some very, specific things that you should do to best position your property. But we found that, we're building in 7 states right now and over 500,000 square feet of new development. So we actually built our own construction company. So we have a construction company in-house with 16 professionals at corporate right now. And so we actually build all of our own properties, build and develop. And we actually build for other people too. So we have a book of business, about 50% of it that's external. We build for other operators as well. And what we found is having that kind of in-house construction, if you're doing development, really mitigates risk and helps you control project timelines and cost. The general cost for construction really depends on your site. It can be anywhere from, $60 all in to $120 all in if you're in a very expensive market or there's some unique features about permitting and development. So I know that's all over the map, but really you have to really understand your site. The analogy I always give is, as kids in school, right, we're given that test, right, where there's two pictures and they look pretty similar, right? Except maybe one picture doesn't have as many bars in the chair. And you have to identify what's different about each picture. That's like self-storage development really in general anywhere, where you go to a market and you say, oh, this is just a flat piece of graded land in a tertiary market. How hard could it be? Right. But then you get into it and you realize every market's a little different. You got the permitting's a little bit different, the utility runs, the expenses. So that's why we really wanted to stay with our own construction company, because we have that consistency and lessons learned that can go along with operating in so many different markets.
Love that. Well, you've kind of painted the picture of the evolution, which is, whether people realize this or not, you start out maybe investing in one particular property and you raise the capital from a couple of friends, or you do it yourself, and then you kind of figure out the business model, and before you know it, now you're full-blown syndicator and you're raising money, and then the next step seems to be, well, let's build it ourselves, and now you've got tighter control into the metrics and all those things. So it's a great evolution of where you've been as a business person. I think one of the unique aspects about self-storage is the variety. You talk to, it seems like a pretty wide range, 60 to 120, but understand there are some facilities that, the private gates and all that technology, and you've got parking of things like boats and RVs that aren't necessarily inside of the units, and that's less expensive than if they're an area where that all has to be covered. And then, of course, some self-storage facilities have a full-time live-in caretaker. So there's a housing unit, and that's going to cost more. Do you guys have any of those? Do you have on-site management?
Yeah, our preference is to have the manager not live there, actually. That used to be kind of a thing that the REITs wanted. They wanted the house. I think what's interesting about that is it's really not needed anymore. There's some properties that are nichely located. Like, for example, I know some of the operators that have facilities in sort of like the really expensive, like Boston markets, will want to have that on-site manager just because they can't find somebody inner city to work there at, given the cost of living. It's a huge attraction to give them that housing at the property. Where in these secondary, tertiary markets, it's not as required. So we've kind of been phasing out and maybe even sometimes selling like the house that's at the property if it's not completely attached to the facility. It makes it difficult if the manager doesn't work out. Now you're dealing with a tenant occupying your space and a manager that you're trying to fire. And so it can get a little bit awkward in those instances. So we're trying to steer away more from that model and take it on a case-by-case basis.
So, Ryan, let's talk about the ways to get into self-storage. Someone's listening and says, wow, this is awesome. This sounds like a great niche. Obviously, you can go find one of these secondary or tertiary markets, do the research. There are great conferences in this space, and kind of like you guys did, figure it out. A couple of years to get your first property, a couple of more years before you're in a position to acquire really the kind of assets that make sense at your level. Nothing wrong with that. And perhaps people live in a town where they think, wow, this would be a great area, or they have some land. So that would be a path in. What you guys have done, of course, is syndicated these deals. So now a passive investor can just come alongside what you're doing. And obviously the purpose of the show isn't to promote that, but do share with us, what does that look like? Who is your investor? What kind of minimums do you guys have? What kind of expectations do they have?
Yeah, our minimums have always been $50,000. Typically, our investor is just like you said, a doctor, a lawyer, an airline pilot, a CEO, someone who owns their own business themselves, or somebody who has had a successful exit where they've, maybe had a business and sold it or exited a company or retired. And so we have investors. We have about 1,100 investors who have actively invested in our projects, spanning our whole self-storage portfolio. Sometimes investors invest in every single one of them, and sometimes they kind of like to pick what they invest in. So we've offered both the fund model, where you can kind of invest in a fund where there's a diversification strategy of self-storages, and we also do kind of the deal-by-deal syndications as well, if that's the investor's preference. And I've found that, investors tend to either want one or two things. They're either trying to put something in their portfolio like ground up development that has the best return possible. We have that. Or if somebody wants to replace active income with passive income, we have investments that have more yield. They're typically, or cash flow yield, I should say, where, the facility exists and they can sort of participate in the cash flow from that property, and then also the upside. And then we also even have a debt offering where people can invest in the debt that goes against these self-storage properties as well. So we've tried to make it so investors can really kind of pick what part of the investment makes sense. And they can kind of invest in either side of it, where it's more ground up or, that cash flowing side.
Now, Ryan, you mentioned the fact that there are these bigger companies that are looking to acquire self-storage. Which side of the fence are you guys on? Are you thinking maybe someday you might be acquired by one of the big guys? Or are you thinking, no, we're going to become one of the big guys and we're going to continue to acquire?
Yes.
Love that answer.
No, all jokes aside, we've found that there's never been a one exit strategy. Obviously, our goal is to turn over about 20% of our business plan a year. So selling properties and making money and seeing these investments go full cycle for our investors. We've had 14 exits to date, successful exits of these properties. And really what we're doing is we're kind of, I kind of think of it as not selling everything, but kind of recapitalizing everything. So the investors have liquidity options at some point in the business cycle where they can say, hey, I invested in this ground up development. It's no longer a ground up development. There's a ton of equity that was built. I want to sell my position and move on and go do something else and lock in my returns. And we have that. But also investors sometimes say, I don't want to lose this asset. This is a really good property. So we sometimes recapitalize that into a new fund that's tax efficient. So really we try to provide that, what do you want to do? Do you want to get in and get out? Or do you want to kind of build up a portfolio and really have that strength of, transitioning from something that's more opportunistic to core value add? Now, our exits have been institutional buyers, and they've been mom and pop buyers, which is interesting.
Okay.
We've sold properties to some of the top 10 operators in the United States in like one-off single properties. We've also sold properties to, like I said, somebody who's just in that market and they want to buy more real estate in their hometown, and they heard self-storage is pretty attractive, and they'll pay usually a better premium for that asset because they know that thing is not going to trade very often, right? If that one facility in their town goes up for sale, it's probably not going to be up for sale every single year. That's their one chance. And then we've obviously had a smattering of regional, national buyers, and then also a lot of 1031 exchange buyers looking to get into the space as well. But we haven't seen cap rates expand or values decline recently like other asset classes have. We've actually seen Green Street data recently saying that self-storage was impacted. It was in the top 3 impacted the least. So values have held really strong. And so that's what gets us excited. We're in this for the long haul. We're going to build a big portfolio and kind of sell when it makes sense and keep the assets that are high quality.
Who knew there was this much to know about self-storage? This has been great stuff, Ryan. If you're interested in learning more about self-storage, or maybe you're just driving or working out and not able to take notes, Ryan's got a great ebook he's going to make available to the listeners. It's called Enter the American Store Age. Why now is the time for investors to get into self-storage. Talk about what's in the ebook, Ryan.
Yeah, I'd say, a lot of it is just talking about the rise of self-storage in America and the world, and also just kind of some of the factors that are behind the self-storage boom. We're going to talk about kind of the 3 E's of self-storage in the ebook, and really some of the tax advantages that self-storage comes along with it. There's a lot of LP tax advantage to discuss, and kind of how our playbook, what we did to build up this portfolio, kind of our decision-making criteria on what makes sense on these properties, why we buy them, when it makes sense to buy, when it makes sense to build, and just kind of give an overview of the industry.
Excellent. Hey, before we're done today, we'll tell folks how they can get a free copy of that. And when you do that, you'll also be able to get Ryan's contact information in case you think investing in self-storage passively makes sense for you. Before we get you out of here, Ryan, we've got some exciting news, which is you're going to come and be one of our faculty members at the Secrets of Successful Syndication, that event you attended all those years ago as a student. You're now going to be up on stage with us sharing what you've done before. before, but we're super excited to have you come. And from the syndication side, just share some of the things that you've learned being a syndicator and the reality of that side of the business.
Yeah, it's a lot of fun, and it's a business that if you're passionate about it, it fits. And I feel like, learning the technicalities of it and also the sales side, I think about three things really when you have a syndication business. You have the marketing side of it, sales, and then you have the admin support back office. And I would say the things that I've learned is those things are, kind of a barbell strategy really in how to build up your company, right? When you have really strong investor success support, we do a monthly communication and monthly financials and all that. So I've learned a ton about what to say and what questions to sort of answer and how to manage a whole portfolio of investors, 1,100 investors. Some people think we're crazy for having that many investors, but there's a methodology into doing that that's talked about at the conference. And then just how to market and attract the right people to your business, because there's investors that you want and there's investors that you don't want. And sometimes it's important to kind of make sure that you're catering to the right audience. And then lastly, just the more boring things, compliance and all the things that go into making sure that you're staying on the straight and narrow when it comes to keeping your house in order, getting your distributions out. We do monthly distributions. So what goes into that, the systems, the processes, how to build your business around that. So lots that have been learned over the last, 10 years or so since that very first syndication conference.
So come on out, meet Ryan Gibson, and learn more about the secrets of successful syndication. You get all the details on the website at realestateguysradio.com under events. Ryan, this has been a great, great, great session. We appreciate you sharing all the knowledge you've accumulated, and we'll look forward to seeing you in March in Dallas, Texas.
Thanks, Robert.
There's Ryan Gibson. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did. For thousands of years of human history, silver has been recognized as money. Then in 1965, the United States took silver out of the financial system. But did silver stop being money? Smart investors don't think so. And ever since, when there are concerns about the quality of the currency, alert investors seek shelter in silver and gold. As the size and frequency of major financial crises grow, silver is attracting a lot of attention. To help better understand the what, why, and how of silver, watch the free 9-part series, Making Sense of Silver. Everything you always wanted to know about silver but didn't know to ask. Featuring 30-year precious metals veteran Dana Samuelson. Send your email requests to silverseries@realestateguysradio.com. Whether you own silver now or you're wondering if it's too late, email silverseries@realestateguysradio.com.
Hi, this is Doug Casey, and you're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, it is not too early to start thinking about honing your sales skills. Coming up this year, it is our annual sales conference. So when I say ours, that means Russ Gray, as he teaches 2 full days of consultative selling and how to win funds and influence people. All the details on the website at realestateguysradio.com under events. Well, my goodness, so awesome to hear from Ryan Gibson.
It's interesting you brought up the whole sales training. And as you know, but maybe the listeners don't know, the How to Win Funds and Influence People training actually was born out of coaching syndicators in our syndication mentoring club, because the core skill set you have to have is to be able to raise money. And so I'm listening to Ryan's interview, and he's talking about selling Cutco knives in high school and then using it to put himself through flight training and realizing the importance of needing how to sell. And here he is all these years later, really putting that skill set to use. Reminds me of Robert Kiyosaki, who talks about in Before You Quit Your Job, the importance of selling as a skill set. And he talks about how he purposely took a job selling copiers for Xerox because he knew he would get world-class sales training and to be able to learn how to sell. Well, my background is similar. I was in the office products industry. I went through some training with IBM, of course, our good friend Tom Hopkins. And so I think that anybody out there who wants to grow a business as an entrepreneur, and that's really what Ryan did. Ryan made the journey from being an individual investor, a pilot with a good job, good credit, good income, and leveraging that into building a portfolio of his own, and then with his friend, Scott, and then eventually realizing, hey, the name of the game here is to build a business. And to scale a business, I need to be able to raise money. To be able to raise money, I need to be able to create compelling offerings and sell them. And so if that is somewhere in your mindset that you'd like to learn how to do that, the foundation of that is to get that basic training and specifically to raising money, which is an intangible. You can't take an investment on a test drive. There's a specific skill set you learn. Ryan's been through the training, I think, more than a couple of times, and many of our students in our Syndication Mentoring Club program have. So if you're thinking about it, come on out and join us. It's How to Win Funds and Influence People. Just go to realestateguysradio.com, click on the events tab, or send an email to HTWF, How to Win Funds, at realestateguysradio.com.
Kind of fun to hear Ryan and how far he's come based on that first seminar nearly a decade ago, where he didn't even know what the word syndication was, as he often tells us. And now he's going to be speaking at the event, which is awesome. You'll definitely want to come out if you'd like to figure out how to passively invest in these bigger deals or actively be a manager of funds like Ryan and Scott are. But lots of good lessons today. I think the asset class is definitely interesting. But you notice in his story, he didn't really come to the table looking to do self-storage. They had been investing in single-family homes locally, got a little bit into construction and development, and then when he figured it out, now he started the path. But he didn't instantly get success in self-storage. Like most stories, he had a couple of years in there before he even got his first deal, and a few more years before they kind of reached their stride. And I think that's one of the important lessons, is that success does not come instantly or overnight.
It's a huge lesson. If you read Gary Keller's book, The One Thing, about leverage and doing the one thing that'll make everything else either easier or unnecessary, and then marry that to Jim Collins' great concept out of Good to Great, which is the flywheel effect, adding one thing to another thing to make both things go faster, you realize that in Ryan's story, he started out, he attended the seminar in 2015, didn't even do a deal in self-storage or decide what his asset class was going to be until a year later. And then it was 3 years later before he actually did his first institutional quality property. And so by the math, that was 2019. Well, here we are in early 2024. And he's been 4 years in a row, Inc. 5,000 fastest growing companies. And so that's that effective compounding. And it hockey sticks. It starts slowly, and then through the exponential concept, it just takes off, kind of like the national debt. But my point of that is, if you're out there and you've thought about syndication, maybe you've tried syndication, maybe you did it for a year or two or even 3, and you were having a hard time figuring it out, and it didn't seem like it was gelling, I think maybe you gave up too soon. And so if you still have that fire in your belly, if you still think you want to do it, Ryan is a guy that you have access to because we've got him on the faculty. We've been recruiting him for a while, finally said yes, been busy building a great company. He's going to come out and share the secrets of successful syndication, which is amazing. But we also recruited him to be a mentor in our Syndication Mentoring Club program. So that's even more exciting because that's kind of live Q&A once a month with Ryan. So I think his story is so inspirational on so many levels, and there's plenty of room for more people to help Main Street invest directly in Main Street. Plenty of money in Wall Street that needs to be relocated onto Main Street. Ryan's grabbed $300 million of it. I'm here to tell you there's a whole lot more. Maybe it's time for you to get in on the action.
If you'd like to come to the event, it's in late March in Dallas, Texas. Just send an email to syndication at realestateguysradio.com, and you'll get all the details. Hey, if self-storage sounds interesting to you, whether it would be actively figuring out the markets and the product types that make sense for you, or passively investing with someone like Ryan, then you want to get his great report. It's called Enter the American Storage. Storage. Why now is the time for investors to get into self-storage. To get that and earn your own boxes of profit, just send an email to boxes@realestateguysradio.com, boxes@realestateguysradio.com. You'll get his ebook, lots of nuggets, some of the things we talked about today, certainly the 4Ds, but some other things as well where you can get into a little more detail, and you can try it on for size. Maybe self-storage works for you. I know my favorite tenants in the world are boxes. Hey, big thanks to Ryan Gibson for sharing his time with us today. There is time and cabins left for you to join us on the 22nd Annual Investor Summit at Sea. We're getting back on a cruise ship going to Aruba, Bonaire, Curacao with an amazing faculty. Get all the details on the website at realestateguysradio.com where it says Summit. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys radio show.